I'm talking about the entire EMS space. Kaynes Technology is on our radar. We recently had the veteran IIFL analyst Renu Baid with us, and we asked her what is the one pick. She downgraded the space. We asked her what's the one pick she likes in the EMS area. She said it's Kaynes. Well, Kaynes has seen good growth in the fourth quarter. The order book has also seen a near 10% surge sequentially for FY25. They got ambitious 60% revenue growth guidance. They're targeting a 100 basis point margin improvement. We have Mr. Jairam Sampath, Director and Chief Financial Officer at Kaynes, joining us now. Jairam, good morning. Good to have you with us here. Thank you very much for your time. Prashant this side. Beg your pardon. If I can start by asking you, away from the core EMS space, your plans in the OSAT and the bare PCB area. I think here there were some approvals and subsidy, etc., which was pending. There was some delay because of the Model Code of Conduct. Could you tell us by when are we expecting this to move forward? By when are you looking to commercialize these these manufacturing facilities, and what should we expect here?
So thank you for having me here. Good morning to you all. So fundamentally, these decisions were pending for the new government formation, which you have seen has happened yesterday. And I think it's quite encouraging to note that the continuity is maintained. The same ministers are handling these newer portfolios. And I think this is the third term for this government on its agenda, reformist agenda and developmental agenda. So we expect these things to be taken up immediately. And maybe it's a matter of a couple of weeks when the final nod we expect. As far as we are concerned, we have given all the different information long back. And I think because of Model Code of Conduct, the other procedures within the government in terms of meetings, etc., could not be taken up. And now this will happen. So both the OSAT project as well as the HDI bare PCB project is on schedule. So we have also not lost the time. We have used it to shore up our activities in the other fronts. And so pending this particular approval, which are likely to happen in a few weeks from today, I think we are good to go. And we'll make up the lost time a bit during the execution of the project. So we are very encouraged and excited and look forward to a good conclusion of the project.
Jairam, if this approval, as you're saying, for OSAT and PCB comes through in the next few weeks, you aim to, I think you've put aside about 5,500 crores, right, towards Capex here for these two.
Capex. Total Capex is around 3,740 crores, and a lot of it is also funded by the government subsidies. So so we have a largish project compared to what we've been doing in the past.
Yeah. And so my question was, if this were to come through in the next few weeks, you expect to commercialize these by when?
Yeah, so as per the earlier program, it was FY26, the fourth quarter. And I think we still hold that timeline. So I think we will do whatever is required to, hasten up some of those steps which we had kept some buffers in. So overall project, I think, is on schedule now.
Mr. Sampath, so let's talk FY26, because I'm just trying to get a handle on, the kind of company profile that Kaynes will have by the time you reach that and start commercially operationalizing OSAT. So how much would be traditional EMS, and within that, if you could tell us how much would be aviation, space, and how much will OSAT? Basically, let's say 2 years down the line, what will be the revenue breakup of the company?
Yeah, so we have talked about this year being around 3,000 crores in terms of revenues. And we said that due to the kind of order book and the kind of sectors that are firing up now, the margins also will see some improvement during the FY25. And a similar growth rate is expected to be in the coming year too, the FY26. And FY26, fourth quarter, when I'm talking about the new businesses to start yielding revenues, they may not be very significant capacity utilization being the fourth quarter, but you will start seeing some revenues from there. So the way to look at it is without giving a guidance for the next year, but all I'm saying is that similar growth rates, 50 to 60% over FY25, you can expect for FY26 too. And I think the margins will hold stable. This is based on the order book and the other business profiles that we have assessed.
Okay. Hi, sir. Morning and good to see you in. You mentioned order book. What is the current order book and how much of it is exports? I believe exports are better margin business, so I ask you.
Yeah, so the margins are dependent not merely on domestic or export. It depends on the kind of sectors that we operate. Of course, we don't publish by sector, but suffice it to say that some of these sectors which are more tuned towards high-tech, low to medium batch size volumes, high variety sectors. So they are the ones where we are actually having the accent on the order book. So current order book, as of March, it was about 4,150 odd crores. And the order book is increasing at a rate anywhere between 300 to 400 crores a month. So I think the growth rate of order book continues, probably at the same rate or even a little higher. And as of now, to that order book, we have some more indications on the industrial side, on the smart meter side, and all other sectors too. So I'm pretty confident that this order book will continue its journey upwards. So by end of FY25, it will cross after completing the 3,000 crores for this year, may cross beyond 5,000 plus some crores.
You mentioned smart meters, and that's a very interesting space. Out of your total book, how much of it is smart meters? If you could give us that number. And you've told us about the revenue number for this year. What should the margin number look like? Because you have indicated that margins will improve by 50 to 100 basis points. So a comment on both these two. So, smart meters and margins.
The second point, so in terms of margins, we're expecting about 15% EBITDA margins this year. That's up about 100 basis points compared to last year. And in terms of smart meter order book, the way to look at the order book is that eventually what we will have is the industrial and electric vehicle segment, which is about 42% of our total business, will remain in a similar vein because all other sectors also are growing. So while I'm not at liberty to tell you exactly what these orders are, several million pieces of orders have come in the smart meter area for us, and we have to kind of start executing. So this will significantly increase the possibility of achieving or exceeding even the guidance that we have provided.
Jairam, your sort of long-term revenue target is $1 billion, right, by FY28. Now,
yes, it is.
That I don't know if that was an aspiration or a target, but now you got to get to it because the market is already pricing in you guys getting to it by FY28. Because if you look at some estimates and P ratios, etc. for 28, I mean, So my question is, can the opportunity size between now and then, and I guess that's what the market is building in, become sort of larger, which we can't see right now? I mean, along the way, can it become much larger?
Yeah. So what you see in the order book are the ones which are what we call the organic growth. Already customers who have approved us and who have been working with us, and we have got some orders in the past, and they have given us their future order book for so many. I mean, the order books for each customer varies between 6 months to almost, sometimes in some cases, we get up to 5 years worth of orders. So typically, on an average, order book represents 1.5 years worth of business in our business as of now. And going forward, probably that horizon will improve a little bit, increase a little bit as the orders come in. And we have said also that between 50 to 60% growth rate, like a CAGR, if you will, over next several years. So FY28 now is in visible spectrum right now. It used to be an aspiration some time back. Today it's in the visible spectrum. And so that will be like we have mentioned, our target is to kind of get to about $1 billion, assuming that rupee dollar does not wildly fluctuate. So looking at about 9,000 crores or so of total revenues. That will include about 25% approximately will be the new businesses, semicon and the PC board businesses. The remaining will be the EMS business. So so we are on, I think as of now, whatever indications are there, we are on track.
Sure. All right, Mr. Sampath, we'll leave it there. Good luck with those plans. The stock has done well. Kaynes Technology is up about 130% in the last 1 year.